The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. Sunny Florida, kind of cold here this morning in the TFNN office. Good to be here. Hope you guys are doing okay this morning. We're going to go right into the staples. We're going to focus on that this morning a little bit here. And a couple of things that we were trying to point out yesterday, ENDP, a couple of stocks here, putting on the radar screen, MCK, or MKC, excuse me. We're going to take a look at that one. We're going to see how that acted. And we're going to take a look at Kellogg, a couple other stocks in the staples area. These are the ones that were the breath that still kind of stayed heavy as of yesterday. And we're going to take a look at how this may react relative to what's going on in the S&Ps. A lot of news out this morning in Belgium. I don't know if you guys are keeping track of that. They're kind of having their 9/11 today. Amazing situation. Took in, quite a few refugees, very open society, and, they may be changing their tune. We talked about the big, powerful POC yesterday, 2046. We reached a high last week, 2043. We reached a high yesterday, 2045. So that weekly POC on the June contract of the S&Ps is held very, very well. And this morning, we're pulling back on the daily here, and lo and behold, we've got a new profile attempting to appear. We talked about that yesterday, and we're going to go right into that. We're going to go into our futures section before we go into that staples area. And we're going to plow through the first break too, folks. So try to get back some time we lost at the beginning here. S&Ps haven't started that yellow peel back yet on that daily, but you should see that in the next couple of minutes here. Pre-market, we're still going to have to pay attention to that. But that means, without question, there's going to be a new profile attempting to appear. You'll see that yellow peel back on our S&Ps, and we're going to take a look at some of the other futures contracts for these U.S. indices in just a second. But again, you'll have some new information, some new inflection points that'll be locking in more than likely based on what's going on here with the S&Ps, looking at the chart right now. We're going to go into the 240s here. We talked about this 2031 yesterday being a big number. We've really got to start getting some momentum and get down below that 2031, 2032 to start feeling good about any type of breakdowns. As you can see, the 240s have kind of regulated this trade up. We've had a couple of disturbances along the way since that low of 1877. Excuse me. We had some lower lows before that, but the most recent breakdown back in mid-February, and then let me just make sure what the actual lows were. 1794. I was looking at a short-term chart. We're not going to be able to catch all that. But as we look at the 240s, this 240 kind of regulates that long-term trend and that, breadth calculation where we keep up with on the long term to try to get a tie to the marketplace type of look. And when you look at these breakdowns that start happening on the 240s, you've really got to pay attention to them, in my opinion. So that being said, we're going to go back to the ETF, the consumer staples. And we're going to look at MCK, or MKC, excuse me. Why do I keep calling it MCK? Here we go. We're going to take a look at this one, and we're going to take a look at ENDP, MKC. So this is one we talked about putting on the radar screen yesterday. Here's where we're at. And we talked about the possible, and that was the action yesterday. Had a little bit, sideways move in the S&Ps yesterday. But as we look at this, we talked about getting targets. This is a little bit of a scarier trade here. We picked this up off the scanner. Targets initially down below of 92.86, and I think this thing is not the weakest stock in this sector. But again, you're gonna, in my opinion, with the breath rolling over on this particular ETF, some sector rotation, you might have a chance for this to pull back even farther than 92.86. So that's the way we're looking at that one. Let's look at ENDP. And this is a stock that, the gift that keeps on giving. This is a weak stock in a market that continues to go up. And as we look at this, I know there hadn't been a lot to hang on to here, but again, it's a stock where you can put some monetary stops in, play the weakness game. If the market turns around, a lot of these stocks that don't want to be bought will, in a rising market, will just completely implode a lot of times when we have a market pullback. Let's take a look at HSY, also in the staples. We're just taking a look at this particular sector because it's showing that relative weakness to what's been happening in the index itself lately. So here's Hershey, and here's a relatively wide profile in our weekly. That means we're going to have a lot of volatility in this stock. That's the first thing. We also have the daily, which now we've kind of come down. Yesterday we kind of retraced back up into it, and I really like this trade because 90.90 or 90.91 at this stage is going to be something you can more than likely lean on. Here we haven't had any prints this morning, but I really like the setup on this. I like the way it hasn't really participated lately, and now that we're breaking down below profiles, this is a very, very choice pick. In my opinion, looking at the scanner and trying to figure out what's the weak stocks and the weak stocks in the weak sectors. So as we look at this, you can kind of, I read this kind of like the Matrix now. I kind of find color schemes that I like and arrows and numerical schemes that I like. So as we look at this, MKC is obviously a relatively strong stock. We're green on long-term and daily, but we're at an inflection point. We could have a little bit more of a exploration of at least the daily fair auction. So that's the way we're looking at that one. Let's look at WBA, Walgreens Boot Alliance, and let me see if we can find another choice pick here. Hershey Foods was insane good. We'll take a look at CAG again. This is one we looked at yesterday before we look at the stock I just mentioned. This is one we pulled up. And again, this is one, and let's just kind of revisit the S&Ps really quick before we take a hard look at it. The S&Ps, again, were up yesterday, or excuse me, let me just make sure. Yeah, closing print was up, but just want to make sure. So, a lot of these stocks that we're showing today in the staples area are showing, again, make new highs. These stocks can't really get out of their own way, and then we're kind of having a pullback today. So I just want to reiterate that first before we go into CAG. CAG, here we go. How can you short Hershey? But you can. Let's take a look at CAG. All right, so this is one, again, acted well yesterday. We were kind of sitting on the precipice, on the cliff yesterday. I love how this thing acted. I love how it closed below profiles. And I like how this thing's identified. I like how this thing's identified itself early. Now, again, market pulls back. This is a type of thing where you will have some people exiting this particular long trade. And, where do they exit it unto? You've got 42.18 sitting down here. I know that's only about a point away from where we were at on the close yesterday, but guys who are looking for trading opportunities and risk-reward scenarios that I think are really, really good, you've got a chance to, participate in this, maybe take half the trade off around 42.18, and then see if we can actually drift a little lower, and drifting a little lower to the point where we would have a new profile attempt to appear. So you guys are still talking about chocolate over there. So that's kind of the name of the game. And you can also look at these 240s as kind of a trailing stop situation. I really like how this, now this is really interesting as I pull up CAG again, and I'm going to pull this up in the scanner. You can see all of this as plain as day. So we're getting below profiles here. And this particular profile, if we go into our chart and we look at our 4-hour, again, we kind of closed here. Profile appearing above price action is bearish on that time frame. So we've got a couple of wins in our favor here already on CAG. Really nice little situation. We're going to take a look at ADM also. This is also in the Staples area. So let's take a look at ADM really quick. Not ADDM. Archer Daniels Midland. Wow, what a big company. All right, so again, the scanner's showing this is, as Tom would say, kind of cool here. So we haven't been the strongest stock in the world without question. And as we look at this, and we came off of these 38.82 unfair highs on the weekly, kind of, pulling, as the market's doing what it's doing, making new highs, this thing's really not participating this week. And now the daily, the scanner's telling us, even though we've had a pretty good run up, still within those weekly profiles, what the scanner's telling us now is we're going to have a new profile attempt to appear. That's not showing on the chart. These things ultimately get coordinated as pre-market. We're having a little bit of adjustment in E-signal this morning. This is what we use to populate a lot of this. They're at Interactive Data, their data center. But as you look at this, ADM's new profile attempting to appear. Don't have any prints this morning, I don't think. Let me see. Not yet. No. But again, we're looking for something with decent risk reward scenarios. You've got a target down below, ultimately I think at 35.09 on the long term, and then you've got some risk reward scenarios that are in your favor by putting stops above 39. But again, you're going to more than likely have some new inflection points to pay attention to here on the intermediate. So that'll be in your favor. What does that yellow mean on the scanner? It means a new supply area is probably going to appear, and we're going to have to wait and see where that appears. But it's not a bad setup for ADM on the short side. Okay, so another stock we want to look at is, and I'm trying to find some decent setups here. Let's take a look at Kroger. We took a look at this one the other day. And again, these are stocks we're trying to keep a heads up on. So, ouch. Wow, this thing acted ugly yesterday. Here's the weekly, and this was one I really, really like. I love the way this thing's acting below these long-term weekly profiles. Again, that unfair low on the weekly profile has been tested twice. I like how this thing can't really get out of its own way. The risk reward on this, we talked about, there's nothing to really pinpoint it against, but this particular stock could just drift down into 37.29 and even lower. So again, we talked about the risk reward above 39.30. The targets, this is about a 1-to-1 right now initially, but I think you have a stock that could continue to drift lower, showing itself early. All right, we're going to go to break, and we're going to be back in about 3 minutes, and we're going to hit a couple of currencies and treasury notes and some of the usual suspects and go back to some stocks later. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. And we're going to take a look, we're going to take a break from looking at some of the ETF plays really quick. We're going to take a look at healthcare too, because that's one that's kind of lagging. We talked about that. Here's our daily breath calculations, looking at the heat grid. We're going to be able to drill into that really easily and, find some opportunities as usual. I'm looking at Cigna, a couple other ones here. We're going to pull up some currencies first. We're going to hit gold. Here's the Australian dollar. We talked about just waiting patiently until this thing got into the 75, 42, 43 neighborhood, and we reached a low of 75.51. So what are we, 9 ticks away from there, and then we popped. So that's why we wait until the market comes back. Some of these things are runaway freight trains. They never come back. But if you look at this, you're able to pick some battles around these inflection points. And if you look at the scanner, go back to the Forex section, look at this AUD-USD here. You're going to notice those inflection points that I just spoke of. There was that 75.43. And here's our chart. And there's the daily. That's why we wait until the market comes to us. As we look at these currencies, we're going to take a look down at let me see if I can grab it here, the euro. All right, so again, the bane of my existence. Let's go back to the euro e-signal chart here really quick. I'm relatively bearish on the euro. When I can find areas to hit them. But as we look at this, we look at these profiles kind of like an exponential moving average. When you have the most recent profiles sitting there, especially on these charts, you've got to pay attention to the inflection points that have recently been outputted. Now remember, this euro profile was in force since September, or really late August into September 2015. We just got a new profile last couple of weeks. So that profile stayed in force about 6 or 7 months. So those inflection points on that most recent profile are going to really have some, sorry if I'm hitting the mic, guys. They're really going to have some precedence on what's going on in the current profile. So as we've seen here, we reached a high last week of 113.42. That unfair high was 113.52 on the previous profile. So again, in the neighborhood of those areas, you've got to, talking about waiting for the market to come to you, some of those inflection points from the past, the most recent past, are very appropriate to take advantage of when you're looking to, in this case, trade the euro from the short side. I'm not a big fan of looking at the euro from the long side, even though we had a really classic opportunity set up recently from the long side. Close above, come back and retest. Close above, come back and retest. So these lows at 110.58, the top of the box there was 110.43.44. So again, these are really powerful areas to place trades around and to pick battles, hopefully get some leverage off some longer term, some shorter term time frames. And those weekly closes above and retests are always high percentage plays, in my opinion. Let me see if I can get this to. The chart's locked up. Here we go. Let's switch to something else. Okay, so as we looked at a couple of currencies, and I think, here we go. I think we can take a look at the Canadian. Again, this is something I've had my eye on for a while, and with crude oil doing what it's doing, I think the crude oil situation is probably going to sit still for a while. This is the Canadian dollar. Had a little bit of a bounce here, but let's take a look at crude oil first before we make any blanket statements on this one. Very good correlation to crude oil in general. Here's the, let me see here. Here's the May contract on crude oil. And again, we reached the targets on the April around 42. Similar areas on the May contract around 42.53. So again, that was the kind of the lofty aspiration, Custer's last stance on crude oil. I think we're just going to bounce around here. Got a relatively thin profile, which is kind of wild on the weekly. And let me see if we switched over in the scanner here. Still on April here. I think this is rollover day. All right, so 42.53, 42.53 unfair highs on the weekly, very similar to that 41.82, I believe, on the April contract. Coming back a little bit, sitting here. I don't see any leverage on crude oil to kind of really step in right now. I think we've kind of reached our targets, even though this is the way we look on our daily. 40.48 unfair highs. Testing it, I think we're going to kind of fall apart here and probably explore down to 38 and some change. So what does that mean for the Canadian dollar? We're going to take a look at that and go back into it. And here we go. Here we go. All right, so as we look at this, very reactive to crude oil. The breakdown, the valuation of the Canadian dollar getting down below 137.59 was a pretty big event that closed, and then the trail down. So, getting a little bit of a devaluation again. We used that as a little bit of an indicator when it came to looking at crude oil in general. As we looked at the XLE, the Canadian dollar, the ruble, a couple other things that were, and we also looked at the Bovespa, the coal cap, a lot of countries that are resource selling dependent, if you will. Here's the Canadian dollar. If we get a retracement back up into 132.94, that's going to 133. That's going to be your targets on this. Crude oil, I think, is going to kind of fall apart a little bit here, and that's the targets on the Canadian dollar. Really don't have a lot to lean on here as far as stops. It would have to be a monetary stop if you're playing this bounce in the Canadian dollar, which will be the devaluation here. Also, taking a look at the ruble, this is one that we looked at as a somewhat of an indicator. We're kind of hovering below this unfair low here, 69.03. I think we're going to get back above and just kind of bounce around in that weekly fair auction on the ruble, which will possibly be some indicator for crude oil too. Let's go back to, let me get my screen here straight. All right, let's go back and look at the XLE really quick. And while we're on crude oil, we're going to go back into the scanner, and we're going to take a look at the XLE and where that's at in the grand scheme of things. Over here, kind of not looking too ugly. Didn't have a great Let's see here. Yeah. Seller dweller on the short term. So let's drill into that really quick as we're looking. Let's look at the ETF in particular first. So it looks like this morning we're gapping down a little bit. All these things seemingly won't be boding well for crude oil. Here's the unfair high on the XLE contract, the ETF itself, and that's around 63.74. We talked about that was going to be the targets, and then we're going to have to watch out because we may have a little bit of a downturn. That won't bode well as an indicator for crude oil either. So we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out, and throughout the week when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. And we're taking a look at the Shanghai really quick. 3056 before we get back into some crude internal instruments on the XLE. 3056 at unfair high. We talked about the Shanghai, kind of that was the targets on this particular fair auction, and we reached a high yesterday or today. What would it be? There's 12, 13 hours difference in Shanghai. Unfair high, 3056. I'm going to call that satisfied. We may get a little bit of a relaxing mode here in the Shanghai. The U.S. market seemingly have disconnected from that whole scene, but again, Shanghai moves down. Markets seem to move sideways here. Shanghai moves up. Market seems to pop. May get a little bit of a churning action in the S&Ps at bare minimum, and the Shanghai may kind of pull back a little bit here from that 30.56 inflection point. Neighborhood being tested there for sure. We're going to take a look at the 10-year. Man, wow. This is, let's see, we reached a low this morning of 128.30. So again, you know, you guys know the drill on the Yellen statements. A little more dovish than perceived beforehand. 129.02 unfair lows on the weekly. We're just kind of getting back above there. We talked about that's going to kind of now be something to pay attention to as far as a little bit of a supporting action. May just rattle around here and move within that fair auction. A little mixed up on the 10-year myself, so I'm going to kind of leave that alone in the short run. And if I'm going to trade it, I'll be trading it from the long side around 129 with stops below. Let's take a look at gold. This is something, you know, we talked about, you know, the unfair highs at 1264 rounded off. You know, we talked about waiting for support on this. We talked about it yesterday, in fact. We've got this unfair low around 1244.5. We hit that. We're bouncing up off of it. I think gold's going to churn around here. I mean, if you got to, you know, buy this, you want to wait until this market comes to you. I missed a big trade, never getting down to 1218 the other day, being a little stingy. But again, you know, this is the supportive area on gold right now in the intermediate, 1244.5. It's held. It's coming off of it nicely, which is, you know, indicative of it doesn't want to be there. And it's nice that it's not consolidating and you know, in that general area. That's usually a kind of a follow-through pattern, if you will. And my NCA bracket is disgusting. It's the Jay, to answer your question, how's my NCA bracket doing? It's appalling that I can make that bad a pick. It's awful. But some teams I think have destroyed some other folks too. So as we look at gold, just to sum it up, 1244.5 stops below. I think your target's up top. You got to pay attention to 64 and 75. I think gold could kind of churn around here. There's not a lot of events coming out right now. So that's where we're at with gold. We're going to go back to my least favorite long trade here. But again, we got above 1578. I'm not a big fan of going long silver. It's amazing that we have kind of alerts forward here, but again, this is kind of a no trade for me. I'm not the biggest fan of being long silver, but I got to admit that it does look well here, and you've got big time support now at 1584. So you can play silver with a tight stop and kind of let it breathe if you'd like. I'm just not a fan of going long silver right now. That's my stance on it. Let's take a look at November beans, because this is something that now is, you know, as John from Philadelphia stated, I mean, this has a really, really good chance. It's really acting well ahead of where I thought it would start making moves. But remember, I mean, stepping back and taking the whole move up into consideration, you know, we talked about this 915 area. This is November beans. And this has been enforced since September 2015, this profile. These inflection points, the longer you're in a profile, the more relevance that they have in general. So as we look at this, remember that we've tested it already last week. We've pulled back. We're coming back up into it again. That is not the type of action you want to see for a trading range. You want to see these things hit it and pull back and just kind of settle in. So this is, I would consider this relatively bullish. If we get a weekly close above 915, that's the chance, I think, that you could really start looking at that as stop-oriented for this thing to climb. And I'm kind of amazed that we've raced back up to it that quickly this week. So there you can see the pullback, and then here's this week's action so far. So really acting extremely well. And you've got the possibility that some folks will start covering outside of this range here. So this is a decent play. Reached the initial targets, pulled back, now kind of, I like the action on this from the long side. But again, you got some decent risk rewards on this by being able to look at those weekly unfair highs at 915 to orient stops around. All right, let's go back into the XLE really quick. Let's try to find some opportunities here. Let's drill down into the internals themselves, and let's just kind of look at this by not doing any custom sorts. Let's just look at this and let's try to find some things that are, as I scroll down here. All right, okay. Let's take a look at Occidental Petroleum, OXY. Why am I picking this out? I'm just noticing very quickly that we have some simultaneous inflection points here at around 70.60 and 70.69. All right, so, and we're starting to kind of get a little heavy here below the lower term time frames. So let's go into OXY here really quick. And this might be a really good risk reward scenario. I like it. I like it. I like it for a couple of reasons. One of them is because we've got some action this morning, 70.12. So we are below those two inflection points. And that's kind of cool because, you know, a lot of charting packages don't reflect that weekly and daily yet until the market opens. And you'll see it on the lower term time frames. As you can see over here, OXY is starting to print here, 70.12. This is our 60-minute, and this is our 240. So again, the scanner is going to show for you, and going back to OXY, the scanner is going to show for you that the level of the market real time, this is where it is visually, all right? And we are trading below those profiles because it's incorporating pre-market prints. So that being said, let's go into the stock itself. There's a couple of reasons I like this. Getting below those lower term time frames is great. We're also getting below the unfair highs here, 70.61 on the weekly and 769 on the daily. So I like how it hasn't really participated in the lurch forward by crude oil. I like how the lower term time frames are breaking down. I like how you've got two inflection points to lean off of there to orient stops, and I like the risk reward on this, possibly down to 65 with a pretty tight stop of maybe 50 cents to $1. We'll be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I was just reading something Fletch posted in the den. Vegan eating would slash foods global warming emissions. Does that include, did they include the methane part of that? Just kidding. Okay, so a couple of questions about crude. You know, I want to go back to it really quick. We're looking at the May contract here. This is crude on the daily. And again, you know, I mean, I know we're trading above profiles on the daily. We've kind of lurched forward. We've gone back and retested it at 40.48. But again, I think the big news is here really we've got a relatively narrow profile, and you know that's a usual indication that we're going to have a breakout away from low volatility. And in my opinion, since we've already hit that unfair high around 42.53 on this contract, and again, we reached a high last week of 42.49. I mean, 4 cents away from it. I mean, we're probably going to come back and retest bare minimum this 39.29 just to kind of explore this fair auction. And that daily is going to be broken. And that 39.29 is something I'm looking at as a target. And I'm looking for some oil plays that are going to be sympathetic or empathetic to that type of move down in crude oil. And I think, you know, we've kind of done what we're going to do in crude oil for a while. That's my opinion. The good news is you can always put stops above 42.43 if you're looking to short this. Again, I mean, we've had about a 30% move, 25% move, 30% move in crude oil recently. We've reached those weekly unfair highs, and therefore I'm looking into this XLE and trying to find some opportunities. We just looked at OXY. I like how it really hadn't participated very well. I was looking for things that were sitting. Let me just cruise through this one more time. Diamond Offshore, man, let's take a look at that one. DO. And I kind of like this. You know, I mean, I know this is kind of compression up into that inflection point, 23.99. But again, my opinion is crude will relax a little bit here. The good news is on this one, you've got a chance to orient some stops above, and you've got some targets down below of initially 21.86. So you got about let's see, maybe almost a $2 move possibility down to kind of re-explore this fair auction here. I like how this stock is not making new highs, with crude oil's making new highs recently too. I just think this thing's run out of gas for a little while, and the scanner, you can get all of those inflection points right there. That's the situation there. Pre-market, wow, we're trading down here. Okay. Yeah, 22.95 printing pre-market. All right. So that's another one out of the scanner. Here we go. And I'm looking at these because I'm noticing arrow down on two different sections in the gray there. That means that we're in a defined downtrend. And in fact, you can go over here and let's just see what this says. All right. And as we look at this, let's take a look at something else kind of at the top of the profile here, Halliburton. Let me take a look at this one for us before we get off the show here. Yeah, this is one I like. I like trading it back down below 36.06 and some stops above on this one. Guys, you've been great. Stay tuned to TFN all day, and I'll be in the office with Tom and Tommy and Al and the rest of the gang here all day. Feel free to call in. Stay tuned for Larry.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.